Hello, today is the 15th of July 2011, and this is the afternoon video. And I'm going to be going over this trend line. I've already put this on the blog already, and I've talked about this a little bit already this week. We've had two hits of this resistance point now become a level of support, and it's in process of bouncing from this level. When I draw a parallel line, I want to find the level that is the most suitable, most points hit that shows a good trend channel. And by taking an equal length of this trend and the same rate of ascent, this can oftentimes give resistance and support levels that work magnificently. And in this case, if we were to come up to this level, then if we were to do this now, we would have to still get over 41. Or 40, excuse me, 40, yes, 41. 41 we'd have to get up to. And I mentioned even up to 42 with other trend lines. I stated that if this trend line with the one that connects the one from this resistance point were to match, it would be at the end of next week, and it would be at around, I think it was like 42, somewhere in here. So therefore, if we're to test this now, then realistically, if they were to match, it would probably break higher and then match down towards there. If they were to match by a different way, you'd probably see something like a sell-off first and then it move higher, or some sort of correction through time, and then that move to the upside. And then again, it probably won't even match together. However, if you have any big breaks now, this would be the level I would be focusing on to find that level of resistance. And if it doesn't happen, most of the time it will, but if it keeps exploding, then what I would do is draw yet another parallel line. And then we'll try it again. And that's the way I notice resistance and support works. When it violently breaks one level and just keeps going, then it's going to make a high volatile move towards the next level. So to finish this off, it's been holding the week really well. At some point, we'll need to test a 38.2% Fibonacci from this breakout or the low in here, and then whatever the high happens to be. 38.2% is usually somewhere down towards in here. And if I were to be making a calculated guess, I would be guessing that the 38.2% retracement from this high to this low will match up somewhere in here, which most likely means that we could very easily have a 61.8 here. And if that's the case, we should find some sort of level of top in here where we come up towards here and then find a test at either here and maybe even possibly the second one. That's, of course, another possibility. And you really want to watch out for these first breakouts, too. Is the first break going to be real? Is it going to be a failure? Because oftentimes failed moves do create fast moves. And this is a chart that I put up a few months ago, many months ago, half a year ago in January. And this was just an imagination for how silver was going to trade for the year. And, well, it's kind of been scarily working out very well, meaning this one came up to 50. The timing was about a month off or so. However, it still pretty much managed to get up there. And then the sudden crash. This one was a move from 50 to 40, 52 to 40. And that's about 20% in 3 days. That's what we also experienced. And then this boring range-bound market. But what's significant here is this breakout. And like I say, I just made this myself, but I try to make this as realistic as possible because I've seen them throw many different curveballs before. And if you see a failed breakout, then you got to watch out for that fast move down below. And there would be a fast move down here, which is now showing signs that it's going to break down. But then again, this one could also be a failed move. And I made it so this was a failed move, and it was a very fast move afterwards. But if you're looking for the failures, and you see one that's in sense of brewing in whichever form, and then that gives you a little bit of time to be ready for the possibility of those big moves. Okay, finally, this is July the 15th, so options expire today, and there was the big $25 option. And before I get into it, I want to talk about another one, which is August 44. I just took one out of the blue, but just to make a point. And currently, this 44 call option for next month, which is out of the money right now, is $64 available to sell today if you own it. It's more to buy it. It's about 66 or something, 65 to buy it. Therefore, if you bought it 2 weeks ago when silver was bottomed, it was $12. There's an easy way to make 5 times back or 400%. Just that easy. Now, this is all part of this derivative markets. I don't know how long this system is going to stay afloat. However, what I do realize is these options that were purchased in July, or for the July, but months ago, were done at a very cheap price, $7, $8, $9 a contract, and they got up to $30, $40 maybe, 25. But by buying them at $8, $9 and selling them for 25, 26, enables you to be making gains of about 150% very fast. Brother John F. would probably know the levels a bit better because he's been tracking it more. But what I want to point out is that these options can be sold, and therefore you can buy a successful option that never makes the money successfully. So let's assume, hypothetically speaking, that we get to $42 silver and never get past 44 until September. You can still make this a good trade by selling it right now because you have profits even though you're not in the money because you're selling speculation. You're selling the chance to be able to make a lot of money. If you buy these call options at $44 today and silver ends the month at 48, well, now the contracts are about 400. There's another gain of about 5 times your value again. If you buy these July 25 puts and it goes down to 23, well, now it's $200 for a contract, and you were buying them for like 5 or 6 to start. Then you sold them to these different people to profit take at $17 and $25 and $28 a contract. And well, those people that bought those contracts, they were the ones that lost. My guess, and it's a guess, is that the person who bought these contracts did make a profit, did most likely sell 50 to 75% of what they had, enough to profit, and all the ones that they sold to other people would become worthless.